Hello, today we will go over study problem 3-12 from chapter 3, page 85 from our textbook. So the problem is basically wanting us to construct a cash flow statement. But before I do that, in fact, I would like to approach this problem like a financial analyst and split it into two parts: free cash flows and financing cash flows. Once I understand the nature of the cash flows, it would be quite easy to come up with a construction of the cash flow statement. So first of all, we can see our balance sheet, obviously. So all these figures though represent two given years, the most recent 2 years, 2011 and 2012. Recall that balance sheet is a snapshot, and the snapshots in this case are taken in December 31st, 2011 and December 31st, 2012. We are also provided with the income statement as of the end of year 2012. This is the income and basically the revenue and cost or expense items throughout the year of the budget year fiscal year 2012. And also there is some additional information provided that we might consider using if need arise. Okay, so let's recall the formulas for free cash flows. So free cash flows consists of three parts. So the first one, which let me just represent it as 1. The first one is after-tax cash flows from operations, and by itself this one has its own definition, and so we need to come up with all these figures. And then the second part is the change in operating working capital, and I did also go ahead and created the formula for here. Just here in this case we need to be extra cautious, careful, because here we are supposed to come up with change. So therefore we need to calculate this formula of operating working capital for 2 years, and that would be the same thing for the third part of our formula, in which case we need to come up with change in gross fixed assets and other assets as well. So that one though should be much simpler. Alright, so let's start with the first component of our formula, after tax cash flows from operations, which is the first item here. So for that we will need operating income. So let's quickly go back to our income statement and figure out what operating income is, and obviously it's provided as $54,000. So moving forward, let's just make a note of that here just underneath, so that would be $54,000. Then we need to add our depreciation expense. So hopefully looking at into our income statement we should figure that out as well, and there we are, our interest expense in the amount of $4,000. So let's quickly add that up as well, $4,000. Finally, we need to deduct income taxes. That's also part of the income statement, and there you go, taxes in the amount of $16,000. And we are pretty much done with the first part. So therefore, adding up 54,000 and 4,000 will get 58,000, minus 16,000 we should come up with, I believe, $42,000. And it's time to also put it into the first component in our formula for free cash flows, 42,000 minus. Now time for the second part, change in operating working capital. Operating working capital is basically the difference between current assets and non-interest bearing current liabilities, and we need to do that for the 2 years, for 2012 and 2011 as well, and then look at the change between the two. So let's do it for 2012 first. So operating working capital in 2012 is equal to, so let's have a, so for that matter we will need to look into the balance sheet. Obviously our total current assets is in the amount of $280,000, whereas non-interest bearing current liabilities would be basically the accounts payable portion of liabilities and the accrued liabilities. And because there are no short-term notes, we don't have to worry about other interest-bearing accounts. There's none, so therefore this number, the $153,000, will give us the number we need. So therefore 280 minus $153,000. So we would have 280,000 minus $153,000. This would come out as $127,000. Okay, now we need to repeat this calculation for the previous year as well. So again, going back to our balance sheet, we need to come up with these figures, and that time it's much simpler, huh? So we have the total current assets as 275 and non-interest bearing current liabilities as 153 again. So basically 275 minus 153. That would give us 122. Looking at the difference, we would realize the change in operating working capital is but $5,000. So now we can scroll back up and input that $5,000 into our equation. Now in the final step, we need the change in gross fixed assets. Now going back to our balance sheet, we realize that gross fixed assets were $311,000 in the most current year, whereas it was only $238,000 in the previous year. So therefore the difference should give us the change in gross fixed assets. So 311 minus 238. So that would be the third part. The change in gross fixed assets equal, so $311,000 minus $238,000. So there's 62 plus 72, 73. Yeah, that should give us $73,000. Now let's move up and plug that in as well. And so that one is $73,000. And we can come up with our very first figure. Our free cash flows would be simply 42,000 minus 5,000, 37,000 minus 73,000. So that would be minus 73 minus 33 would be 40. We have, so 36, I believe. $36,000. So this is the final figure we have for our free cash flows, and so that we need to make note of this. Now we can move on in the second part of this video. We will move on to financing cash flows and see if those two match with opposing signs.